By the South Florida Business Journal on a commercial real estate price to rent single family homes in South Florida up as much as 40%. So we've been talking about the migration to Florida since the pandemic, and investors and businesses and individuals and families migrating 1,000 people per day, South Florida absorbing approximately 34% of that. Well, with people, it creates demand. With demand increases price inflation, especially when we're in a 40-year high of inflation. And the Fed's just increased federal fund rate yesterday for the first time since 2018. This is what happens. Miami-Dade County has home to the highest price increase for single-family rentals in the nation, according to a recent report from property information data analytics company CoreLogic. Rents rose 38.6 to $2,400 a month between January 2021 to January 2022. That's year over year in Miami-Dade County, the highest percentage increase out of 20 major metro areas examined in March 15th study. The year before, rents for single-family homes there were up just 2.2 year over year, pretty typical and average. Nationally, the average increase was 12.6%. According to Irvine, California-based company, the year before, rental rates for single-family homes across the nation rose 3.9%. Renters in Broward and Palm Beach County were not spared from the rate hikes. During the same time period, the cost to rent homes with at least 3 bedrooms in the respective counties rose 23.9 to a median price of $2,400 a month and 25% to $2,700 a month. Housing costs throughout the Tri-County area have increased as more people, particularly wealth transplants from out of state, moved to the region. This trend accelerated after new tax laws championed by the Trump administration limited federal deductions for state and local taxes to $10,000. Florida has no income tax, and the migration was further enhanced during the pandemic. Brokers have told the Business Journal. It's led investors to pounce on opportunities to buy and develop apartment buildings locally. This migration has pushed up housing costs in single-family and multifamily buildings, forcing the average South Florida renter to spend more than 23% of their income on rent, according to a separate report from National Association of Realtors. Apartment rents increased 19% in Miami-Dade and 23% in Broward and 31% in Palm Beach County as of the fourth quarter of 2021, according to the National Association of Realtors. In comparison, multifamily rents went up nationally 12% in the same time period year over year. Most of South Florida's single-family home stock is either owned outright or used as STR, short-term rentals, via platforms such as Airbnb. The CoreLogic report only counted homes that are leased out for more than 6 months, which is typically 27% of Miami-Dade's single-family home stock, 29% of Palm Beach counties, and 21%. It means only 20 to 30% of the stock is leased for more than 6 months. Everything else is STR, short-term rentals. Still, those homes saw much larger rent appreciation year over year in January 2022 than other major metro areas, according to CoreLogic. The second largest rent increase outside of South Florida was 19% hike in Orlando, Kissimmee, Sanford metro area in Central Florida. Renters in Phoenix, Mesa, Scottsdale in Arizona saw rents increase by 18.9 year over year in that same time period. Other metros that had significant rent increases for single-family properties, according to CoreLogic, include Las Vegas, San Diego, Austin, Boston, Dallas, Atlanta, Tucson, Charlotte, Houston. In terms of dollar amount, 5 metro areas have higher rates for renting out single-family homes as of December 2021. San Diego, Los Angeles, Seattle, Honolulu, and New York. This comes from the South Florida Business Journal. Eric Boninsky, reporter. Great article.